This is Philip Chow. I'm the founder and chief investment officer of Experiential Wealth.
So elections always add uncertainty. And midterm election, historically, the current party in charge tend to lose seats. But there's no guarantee. Politics, we know there's no guarantee in any of the voting process that we're talking about. So what we can do is look back and see the last, I think, 17 or whatever number, quite a few midterm elections, what happens. And what happens is every single time going into election, of course, it's uncertain. But after the election, stock markets have increased, right? The stock prices have gone up. Now, it could have gone up 2%, it could have gone up 17%. So one can suggest that, well, gee, if that's true, then let's pile in and put as much money into it as we can. One of the crazy thing about investing is that just as you think you are certain, it remains very uncertain. So I would not suggest, just because looking at that information, to simply say, well, that's the single direction, because life is not binary. So what are some of the other reasons that we think that this may or may not be true going forward? We have not had a situation where we're anticipating a recession right around the corner, right after, a midterm, literally right after the midterm, that the market is actually on pins and needles about it. So the economy is slowing, and that doesn't bode well for corporate earnings and revenue and everything else that has to do with the stock market. Number two, interest rate is rising and continue to rise, as we've been expecting and been widely broadcast. When interest rate goes up, the multiple, in other words, how many times do you pay for every dollar of earnings from a corporation, shrinks. And that's no good either. So the multiple is shrinking, potentially, and the revenue is shrinking, potentially, and potentially we're going into a recession. Doesn't bode very well for stocks. That's not to say that we couldn't possibly have a sudden increase in stock value because it's been kind of beaten up so far this year. On top of that, seasonality tells us, hey, it is coming end of the year. And if you look back in history, the last month and a half of the year is what we call a Santa Claus rally, an excitement, joyful. People are excited and they pile into stocks. That may happen. It may also happen because after midterm, all those things could happen. But in a more generalized economic environment, we think that we are very challenged, and it may not happen this time.